Hello everyone, welcome back to my YouTube channel, and today I'll be touching on how to map your ranges correctly, and I will be touching on the bias, finding the true bias for trading the CRT. So before we even start with mapping any range, first and foremost we need to know what's bias, what we are expecting, what are we expecting, what do we want price to do. That is the first question you should ask yourself before you start picking your ranges. You don't just go to the chart and map out ranges blindly. If you try that, you would be doing something that would be wrong, right? So first and foremost, you want to ask yourself, what am I expecting? Are we bearish or are we bullish? And how do you know that? You can know that through the higher time frame, right? And the next thing you want to do after that is, if you're bearish, it means you want to see a pop above a high, right? You want to see a pop or a pump above a high that would be rejected, and you want to see price break through a low or start below, right? A pump or a pop above a high and price breaking lows. So a bearish trend is one that has a pop above a high, just like what I am drawing right now, and the breaking of lows, right? Breaking lows, rejecting highs, breaking lows. When it starts changing like this, rejecting lows right here and breaking above highs, you can tell yourself that truly you should be expecting some level of bullish price action, right? Before you pick any range, you want to know where you are. You want to ask yourself, where am I in time, right? Where am I in time? Like right here, we have this range high. We have this clear defined range, right? From here, range low, to this area, range high. So we have this range now. And just before this day started, this Thursday started, that we are expecting the range that we're expecting to take out the range high, the day we're expecting to take out the range high. We want to ask ourselves, on the higher time frame, can we see that we are having a bearish bias, or are we still bullish? So I don't know if you understand. On a time frame higher than the time frame where you're picking your range, right, you want to see if you're expecting higher prices or lower prices. That's the first thing to note. Are you expecting higher prices or lower prices? If you're expecting lower prices, it means you're expecting some level of bearishness, right? Bearish price action, and you want to see a stab above a high, an old high, and a break of a low, right? So, and how do we do that? We just go to the higher time frame. This, we first of all pick this range. This range says 1 day, right? So if you just have to go to the higher time frame, and on the high time frame, which is the daily, before this candle formed, we can see that price did something very striking, and we use the previous candle to decide what the direction of the next candle would be, right? So this is where I'll be talking on the bias with more context, right? So here, this candle right here, we can see this candle was a bearish candle, was a bearish CRT. That the candle before this candle we are trying to trade, this candle was the candle that was formed before the candle, right, that was formed before the one we are trying to trade, right? And this is the candle we are interested in for deciding what the next candle would do. Now, what did this candle do? This candle wicked the high, of the previous candle, right? And when you have a wick above a high, it speaks of rejection, right? Romeo states, or he has made a clear model for finding the true buyers, right? And he said, if you have a wick above a candle, like so, a wick like this one, where we have a wick above this candle, we should expect lower prices, right? So we have this wick above this candle, we're expecting lower prices, right? At least to take out the low of this candle that was wicked. Do you understand? Now, just by seeing this, we know we can be expecting some form of manipulation of that lower time frame range. You understand? So let me just put in something. When we have a wick above a candle, we can expect that we would be seeing lower prices. When we have a wick below a candle, just like this one, we can expect that we should be seeing higher prices. And when we have a break above, higher prices. When we have a break below, lower prices. You understand? So here we have this wick above, we're expecting lower prices. Then the day that we were trying to trade also wicked above the candle before it, right? Also wicked, did not really close above. You understand? So we are expecting that price will take out this low. You understand? So that range, we have now confirmed it with we have now confirmed the range with the higher time frame candle structure or candle mapping, right? I will be doing a more structured video on bias and candle mapping later on, right? So here we have, after price wicks above this guy right here, we can see that price also came down to close here. So we are now fully bearish because we have now gotten a closure below. We have gotten a closure below this candle that price wicked above. So we are having two of the same idea for a bearish trend or for a bearish pattern, right? Which is a wick above and a closure below this same candle. Because this now becomes the accumulation. These two candles together now becomes the accumulation for this candle. Let me see if we have something on the 2 days for that, so you can see what I'm trying to explain. This now becomes the accumulation for this candle, right? Now we have a wick above this guy, price failing to take out the previous high. Right here we had this failure swing, a wick above. Then we know, since we're having a wick above, the next thing we should be expecting is a close below. And when we have a close below, it now confirms that we are now fully bearish, right? Now we got this closure, we had price come into a fair value gap and continue that pattern right there. So here where we're seeing a level of we have this wick below right here, we can expect that since we're having a wick below this candle, if there's a range there on the lower time frames, a clear defined range, which there should be one, and this is looking like this is a rejection block, we can expect that price should come to this high, right? Because we have gotten some form of rejection week below higher prices, according to Romeo, higher prices, right? I don't know if you understand. So that's just what I want to touch on for now. Now, before you start taking any trade, you are only interested in the range, right? The range. So this is our range low, range high. You want to see what price does outside the range. You're only interested in taking that manipulation, the entry, right? So we have this range a clear defined range, and we can see that we have the key level right here. Like I said in the last video, your range confirms the key level and the key level confirms the range. They both work hand in hand. You understand? So right here also, Here we can see we have this range high, right? And we have this range low. So stay with me. I want to explain something. We have this range high and we have this range low. And let's just see, remember, time plays a very, 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 very important role, right? And this right here is a new day opening. This is even a new week opening, right? So we can see that price already has taken out, we wicked below this low right here, but failed to break below, failed to create a candle body break below this low, right? And we are still bearish. We're in a bearish trend. We are not trying to trade, when in a bearish trend, we are not trying to trade the lows. We are interested in trading the pump above a high, right? So we are waiting for this high, and some can argue that this would now be the new range from here to here. That would not be wrong. That would not be wrong. But let's see this. Let's pick this true range for our range, and let's see. And for our, okay, this is 8 hours, sir. So on the 8 hours, this is giving us a true CRT candle, right? A true CRT candle. And there is a reason why we picked that range and we did not pick it like this. This would have given, let's see if we would have gotten a CRT here. Here to here. This is 2 days. Let's see. Well, that would have given us a 2 days CRT2. Not bad, right? But let's jump back to the 8 hours. So this is just how you confirm if what you're doing is right or wrong, right? You use time like this to confirm. Now, here we have this 8 hour, what's it called now? CRT. Remember, Romeo states this candle now is the candle we are interested in working with, just like that 2-day candle, just like the 2-day range, right? So this is the candle we're interested in working with. This candle is what we're interested in working with, because everything was inside until this candle formed, right? And this candle formed. We're all inside this 8-hour candle range. Now, when we have a week below, we're expecting higher prices, right? Now, but the high prices would be confirmed when price closes above. So when we have a week below and a week above, we can expect that we would get lower prices. So it's just what I call the CRC equation. I'll be posting a detailed video on it, because I don't want to take too much of your time, right? With time would be doing that. So this is how you probe your ranges, right? This is how you know what to do, and this is how you look at bias through the lens of ranges and candles, right? So here we have a week below and we have a week above, not a closure below this, above this candle, sorry, and we are bearish, so we are expecting that we would be getting that what's it called now, would be getting that bearish pattern right there, or bearish continuation right there. So that is it right there. And right here we can see we made this range low. Remember, time plays a very, 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 very important a very, very important part. So this was Friday opening right here, and price tapped into that low. We have this range low right here to range high right here. Price came very close to the range high and came back down. So but here we have to first of all ask ourselves if this range is a solid one. So this says 1 day and almost half or more. So this is about a 2 days range, and we can see that single CRT resting there, right? So we have this break below this candle, right? But we did not wick above this candle, right? For us to be bearish, we want to see what? A wick above and a break below. A wick above and a break below. You understand? So we've gotten the break below, and we might be getting that price might still get back here in like the nearest future, because this candle already is showing us some level of like I said before, bullish, because we have gotten this rejection right here, and we can see there is we have this other block right here, but we've not gotten truly into this rejection block right here. So we can still expect that price would push higher. So I don't want this video to be so long, but that would be that on the ranges and all of that for today. I would see you guys in my next video. Thanks for watching.